There is a silent transition happening in the global economy right now, and it is so subtle that most people do not even realize they are the victims of it. You feel it when you look at the housing market and realize the goalposts have been moved out of your reach. You feel it when you pay a monthly fee for software you used to own, for movies you used to have on a shelf, and even for the heated seats in modern cars. You are being slowly, systematically separated from the very concept of ownership. I have studied the underlying architecture of wealth. I have analyzed how capital flows, how fortunes are fortified, and how entire generations are quietly stripped of their economic power. What we are witnessing as we head into 2026 is not a temporary economic downturn. It is a structural redesign of human commerce. I call it the Great Enclosure. The institutions that govern our money and the corporations that control our resources have realized that selling you an item once is a terribly inefficient business model. True, permanent profitability comes from converting you from a sovereign owner into a permanent, lifelong renter. They want to turn your very existence into a subscription service. And unless you understand exactly the mechanics of how this trap works, you will wake up a decade from now working harder than ever, completely dependent on corporate landlords for your shelter, your transportation, and your basic digital survival. Today, I am going to tear down the illusions of the modern economy. I'm going to show you the mathematical reality of what is happening to your money right now. But more importantly, I am going to give you the exact step-by-step protocol that the truly wealthy are using to acquire the assets that everyone else is being forced to rent. This will be a long, unapologetic, and highly detailed masterclass. It requires you to abandon the comfortable lies you've been told about saving and debt. But if you execute what I'm about to share, you will build an impenetrable fortress around your family's future. Let us begin by looking at the terrifying mathematics of the present moment. The average American has approximately $65,000 in savings. In the United Kingdom, the average household has about £17,000 set aside. Most of this money sits in traditional savings accounts earning somewhere between 4 and 5% interest. That sounds reasonable until you understand what's really going on. Inflation over the past 4 years has cumulatively exceeded 20% in both America and Britain. That means if you had $100,000 in 2020, the purchasing power of that money has dropped to approximately $80,000 in real terms. You didn't spend it, you didn't invest it badly, you just let it sit there being responsible, and you lost $20,000. This is the invisible engine of the Great Enclosure. Currency devaluation is accelerating globally. The US dollar has lost over 96% of its purchasing power since the Federal Reserve was created in 1913. The British pound has followed a similar trajectory. This isn't conspiracy. This is mathematics. Governments around the world have taken on unprecedented levels of debt. U.S. national debt has exceeded $34 trillion. UK government debt has surpassed £2.6 trillion. When governments have too much debt, history shows they rarely pay it back honestly. Instead, they inflate their way out. They allow the currency to lose value so that the debt becomes easier to manage. Because your savings are denominated in those currencies, your savings pay the price. The people who suffered most were always the savers, the responsible ones, the people who did everything right according to conventional wisdom. They held cash, they trusted the system, and they watched their purchasing power evaporate over decades. When your purchasing power evaporates, your ability to acquire hard assets disappears with it. If your salary increases by 3% a year, but the cost of a home increases by 10% a year, the mathematical distance between you and ownership widens every single day. Eventually, the gap becomes insurmountable. You are priced out. You are forced to rent. Once you are forced to rent, you are caught in the trap. The landlord, the corporation, and the software company capture all the equity, all the appreciation, and all the wealth. You capture nothing but the privilege of surviving for another 30 days. You must escape this trajectory. You must transition from the renter class to the ownership class. This does not require millions of dollars to start, but it does require a violent shift in your behavior and your psychology. Here is the blueprint to reclaim your sovereignty in 2026. Phase 1. The eradication of the plastic master. You cannot build a fortress if the enemy is already inside the gates. For millions of people, the enemy is high-interest consumer debt. When you carry a balance on a credit card at 20% or 25% interest, you are effectively working as an indentured servant for a global financial institution. You are taking the finite, precious hours of your life and voluntarily giving the output to a bank simply because you lack the discipline to wait for a purchase. The first step to joining the ownership class is to declare absolute war on consumer debt. I don't mean managing it, I don't mean consolidating it, I mean destroying it with extreme prejudice. Sell the expensive items you do not need. Cancel every subscription that does not contribute to your health or your income. Cook your own food. Stop buying designer liabilities that only serve to impress people who do not care about you. Every dollar you pay in credit card interest is a soldier that you have sent to fight for someone else's empire. You need those soldiers for your own. Until your high-interest debt is zero, you are entirely vulnerable to the forces of the Great Enclosure. Phase 2. The acquisition of productive capital. Once you have stopped the bleeding, you must immediately begin converting your depreciating fiat currency into appreciating productive assets. Cash in a savings account is not an asset. It's a temporary parking spot that's leaking value every day. You must own assets that produce real returns above inflation. Real assets are ownership stakes in productive enterprises. When you own shares in a company, you own a piece of a business with employees working every day to create value. You own equipment, inventory, intellectual property, customer relationships. These real assets tend to hold their value and grow even when currencies decline. If the dollar loses half its value over the next 20 years, which is entirely possible based on historical trends, the price of everything doubles. A company that sold products for $100 now sells them for $200. Its revenues double in nominal terms. Its profits likely double. Its stock price adjusts accordingly. Your shares, which represent ownership of real productive assets, maintain their purchasing power. Meanwhile, dollars sitting in a savings account simply buy half as much. For most people, the simplest way to own productive assets is through low-cost index funds that track broad market indices. You don't need to pick individual stocks. You don't need to follow markets obsessively. You simply need to own pieces of many businesses and hold them through all conditions. This is how you fight the system. You align your wealth with the very corporations that are raising the prices. When you own the S&P 500, you are sitting on the same side of the table as the billionaires. You are an owner of human progress. Phase 3. The psychology of strategic lethargy. The financial media industry exists to generate clicks and views, not to actually help you build wealth. That's why you hear contradictory advice constantly. One expert says markets are about to crash. Another says we're entering a massive bull run. This noise serves a purpose. It keeps you engaged, confused, and dependent on their next piece of content. It keeps you trading, which generates commissions. To be a successful owner, you must master the psychology of strategic lethargy. The best investors make very few decisions, but the decisions they make are carefully considered and held for decades. In my entire career, I've probably made 20 investment decisions that really mattered. 20 decisions across 70 years. The rest was noise. When you buy a great business or a broad index fund, your primary job is to do absolutely nothing. You do not check the price every day. You do not panic when the market drops 20%. The VIX, volatility index, often called the fear gauge, is currently sitting at relatively low levels, below 15. During periods of genuine fear, the VIX spikes to 30, 40, sometimes above 50. I want to see panic because panic creates opportunity. When the market crashes, the renter class panics and sells their assets at a massive loss. The ownership class steps in, buys those assets for pennies on the dollar, and quietly goes back to sleep. You must cultivate a time horizon that stretches into decades. Impatience is the tax you pay to Wall Street. Patience is the dividend Wall Street pays you. Phase 4. The Strategic Liquidity Reserve. But ownership alone doesn't protect you in the short term. You must maintain strategic liquidity for opportunities and emergencies. Warren Buffett is holding more cash than ever in Berkshire Hathaway's history, over $330 billion waiting. That isn't fear, that's discipline. I always keep cash available even though I know it loses purchasing power over time. Not because I love holding cash, because cash gives you options when others have none. In every personal crisis, cash provides survival time. Job losses, health emergencies, unexpected obligations, these require immediate liquidity that investment accounts can't always provide quickly. You must build a shield of 3 to 6 months of absolute baseline living expenses. I recommend maintaining at least 6 months of essential expenses in highly liquid form, not invested, not tied up in assets that could take months to sell, available immediately. This isn't money you're investing, it's insurance. Yes, this cash will lose some purchasing power to inflation. That's the cost of security and optionality. It's worth paying. Phase 5. The daily discipline of the intellectual moat. Finally, to truly secure your place in the ownership class, you must invest in the one asset that no government can tax, no corporation can enclose, and no inflation can erode: your mind. I read every single day for hours. This isn't casual reading. This is 5 to 6 hours of focused reading daily. This habit compounds like interest. Every day, I go to bed a little smarter than when I woke up. Most adults in America read fewer than 5 books per year. In the United Kingdom, the numbers are similar. The average person spends hours on social media, but minutes on genuine learning. Meanwhile, the knowledge gap between readers and non-readers widens every single day. If you are relying on a generic degree or a standard set of skills to protect you in 2026, you are terribly exposed. Artificial intelligence and global competition are commoditizing average labor. You must become exceptional. You must learn how to solve complex, expensive problems that algorithms cannot touch. The market rewards scarcity. Make your skill set incredibly scarce, and your income will reflect it. The first $100,000 is the hardest money you will ever make, but once you hit it, everything changes. The money started working harder than I was. You have a profound choice to make as the global economy restructures itself. You can choose to be passive. You can choose to let the convenience of the rental economy seduce you. You can lease your car, rent your home, subscribe to your software, and spend your entire life enriching the corporations that own the underlying assets. Or you can rebel. You can refuse the terms of the Great Enclosure. You can ruthlessly widen the gap between your income and your expenses. You can systematically acquire the productive businesses that drive human progress. You can build a fortress of liquidity, eliminate your destructive debts, and elevate your intellectual capital until you are entirely untouchable. The path of the renter is easy today and agonizing tomorrow. The path of the owner is agonizing today and liberating tomorrow. Choose the pain of discipline over the pain of regret. Start acquiring. Start owning. Start building your fortress right now. Subscribe to this channel to join a community of builders, owners, and rational thinkers who refuse to be engineered into permanent dependency.